Welcome to Markets Now. I'm Michelle Rook along with Steve Freed with ADM Investor Services. We're seeing mixed trade in grains and hogs right now with the cattle to the plus side. Corn and soybeans, though, Steve, are higher, and we're putting in some weather premium there. How much weather premium do we need to put into those markets?
Well, when I look at July beans, 1350 seems to be relatively important resistance. Just like this $5.96 July corn is resistance. Now, to me, when we look at July corn break from April 17th down to the low of May 18th, the steepness and sharpness of that rally is sometimes followed by the steepness and sharpness of that decline is sometimes followed by an equal rally. Um, so you get down to an oversold position. You've got funds short corn. Total grain room, they're short about 260,000 contracts. Actually, last year they were long 700,000 contracts. So if we have a weather problem, do they have to buy 900,000 contracts in a market that is so thin with no resting orders above or below the market? In the beans, just a little bit different technical picture. You've gone sideways for 4 or 5 days between 13 and 1350. Really, in order to get the funds excited, you have to go up to that 1385 area. And that's a long way to go. But again, the sell-off from the February high of 1540 down to this double bottom at 1304 is pretty impressive. But the same thing goes for the soybean market in that the sharpness and steepness of the decline could be followed by an equal steep and sharp rally.
Yeah, especially if this dryness that is forecasted continues past, say, the 10-day models. And then at that point, how difficult is it really going to be to try to get 181 and a half yield on corn and 52 on beans? I mean, we're shaving yield off then at that point, aren't we?
I think so. Again, we're not going to kill a crop on May 24th. We never
True.
have, and we never will. But what I thought from the beginning, when our weather guy was talking about some dryness this summer in the Western Corn Belt, now he's kind of focusing more on Iowa, Illinois, and Missouri. I just thought that when we walked in after the 4th of July weekend, that we could see a rally. I'm not saying it's 2012, but we can go back to some prices that farmers might be willing to sell, especially old crop woods. They have record low sales on the books to date. So I think that when we look at Deasts corn, November beans, and even Chicago July wheat, I think we've taken a lot of weather premium out of the markets. I think we're going to have to put some of it back in. And the degree of it is probably going to be just kind of what weather we have in June across the Midwest.
Yeah.
And so you never know what headline is going to trigger these um, AI machines that have taken over from the algorithm machines because they're fast and furious. And so it reduces the commercial and the small spec trade because you just never know when beans are going to be up 30 or when they're going to be down 20. And corn market is, either down 10 or up 10. And so, you look at July corn, and so we went from basically 640 down to 540. We lost $1.
A buck. Yeah.
And now we're trying to figure out, can we trade over 6? Well, I mean, we could, because of the holiday, gap open higher on Tuesday and just head back towards that 640 area. Um, because, like you said, we don't know what kind of yield we're going to have. We do know that there might be some prevent plant acres up in the north, and we do know that there will be some fringe areas that will not do as well as maybe what the USDA said in May, as far as the World Board is concerned. And we won't have official numbers from NASS until September. So it's a long time for the market to guess where value is, especially when Brazil is shipping beans and soon they'll be shipping corn and Russia's offering wheat below the U.S. Now, the one thing that South America might actually help our corn market is that logistically they can't do both. They they can't ship a record amount of beans out monthly and a record amount of corn that needs to go. So corn is probably going to lose out on that. And they don't have a lot of storage, extra storage. So, there may be a couple of vessels that we pick up in corn that we weren't expecting with, that big of a Brazil corn crop.
Yeah, that certainly makes sense. What about this wheat market? Are we trading weather there because of the rain chances in the forecast, or is that still a demand issue there? Even when you see EU wheat being imported into the US, it feels like there's a demand issue there.
Well, I mean, the market has to try to figure out the difference between cheaper Polish wheat coming into the US and maybe even German wheat versus the futures market. And so I think Kansas City is down 24 cents and Minneapolis is down 15 because of demand. Because we're so more expensive on the future side than Europe, Eastern Europe, and Russia. So whenever there's a tender, they say, okay, our floor price in Russia is 260, but they try to do the tender at 240. And their wheat quality is good. And then I am told that the wheat that's coming into Florida is a very good quality wheat making flour, and it's a very profitable trade by the people that are bringing it in. So, that's how off our futures market is on the demand side. And so, we're getting rain in Canada, we're getting rain in North Dakota. So, it's hard for dryness in the spring wheat, or it's hard for a lower HRW crop, or it's hard for dryness beginning to start in Australia because of El Nino to be a bullish factor when our prices are too high relative to the competition.
Yeah. So if we've lost our global competitiveness, does that mean we're due for, is this a long-term commodity reset, or is this a short-term commodity reset, do you think?
I think it's long term. I think that there was a meeting in Savannah, Georgia, about a month ago with some ex-U.S. Secretary of Agriculture, and their job was to look at long-term U.S. export demand. And they came out and said that each year we're going to lose market share to the Russians in wheat and to South America in corn and beans. They could easily, each group could increase 18 million acres of wheat in Russia and 18 million acres of beans in Brazil without touching the Amazon. And then you could see a bigger corn numbers. And then on the other side, China is the biggest buyer of energy and commodities in the world. And their economy has not become as strong as some people had hoped coming out of COVID. And we just heard that there is 45 million cases of new COVID in China, and that by the end of the month, it could be up to 65 million. And so does that impact China's import demand of food? They've already reduced their meal imports because of feeding more wheat. They want to be self-sufficient in corn, and we're getting close to Brazil being able to ship 100 million tons to China, which is equal to their crush. And so the bottom line of this group was that at some point, maybe 20 years, our crops will be for basically domestic use only. And so does that mean that we're going to put more of our grain through animals and ship more meat out, which is value added? Does that mean that we have to have less acres? Because the yields aren't going to go down. And, we're not going to have a 2012 every 10 years. So I think it's a very big red flag that farmers need to realize that this losing market share is a long-term problem.
Absolutely. So you mentioned meat. Let's talk about the meat sector, cattle in particular here. We're back rallying here today. I know the debt ceiling talks maybe spooked the market initially this week, but now it looks like higher cash trade and these tight supplies continue to push this market up.
Number one is tight supplies. And, you had an outside day today. We're starting to see an increase in open interest from the low of May 9th. And during this whole time, you basically have gone from 160 up to the 166 area, and there's nothing really to hold back trading over the 167 in cattle. And so I think that the open interest says that we're getting new longs in, and then when we look at the trade volume, um, the biggest volume that we had was back the 10th of May for like 3 days, but today the volume has picked up after about 6 or 7 days of lower volume. So I think that the number one question that you see on the business channels is, should I trade stocks now? Should I have some kind of balanced portfolio? But they don't mention anything about trading cattle or trading grains, which means that we have no participation of the speculative money in our markets. And if we have dry weather, they will rush over and try to get in to the game.
No doubt. Something to watch for, that's for sure. All right. Thanks for joining us, Steve Freed with ADM Investor Services with Markets Now.